Welcome to another episode of Market Brief After Hours. We've got a packed show for you today as we dissect a pivotal day on Wall Street, where a highly anticipated inflation report gave investors some much-needed breathing room. Let's start with the big picture. How did the major U.S. indices wrap up today's session?
It was a largely positive day, especially for tech-focused investors. The S&P 500 climbed 0.26% to close at $7,749. The Nasdaq Composite had an even stronger showing, adding 0.54% to finish at $26,588. On the flip side, the Dow Jones Industrial Average lagged slightly, slipping just 0.04% to settle at $53,770. The real catalyst here was the July Consumer Price Index, which came in right on the money, reassuring the market that inflation is continuing its slow downward trajectory.
Let's break down those CPI numbers. Exactly what did the data show, and why did it bring a sense of relief to the trading floor?
The headline CPI rose 0.1% on a monthly basis, which brought the annual inflation rate down to 3.4%, a slight decrease from 3.5% in June. If we strip out the volatile food and energy sectors, core CPI advanced 0.2% for the month and 2.5% on the year, down from 2.6% in June. This cooling trend is exactly what the Federal Reserve wanted to see, especially since 3 dissenters voted to raise rates at the last meeting due to persistent pricing pressures.
With these numbers in hand, what are the expectations for the Fed's next meeting in September? Are rate hikes off the table for now?
The market certainly thinks so. According to the CME Fed Watch tool, the odds of the Fed keeping its benchmark rate unchanged next month in the range of 3.50% to 3.75% jumped to roughly 60%, up from about 45% just a week ago. Analysts are noting that this no need to hike narrative remains intact. However, we do have another round of inflation data before the September meeting. So while the Fed is currently positioned to hold steady, they aren't entirely out of the woods yet, particularly with oil prices remaining elevated.
Speaking of oil and interest rates, how did Treasury yields and the housing market react to this inflation report?
Treasury yields barely budged, showing that bond traders had already priced in this inline data. The yield on the key 10-year Treasury note rose less than 1 basis point to 4.69%. Meanwhile, the policy-sensitive 2-year yield ticked down slightly to 4.203%, and the 30-year bond yield rose just over a basis point to 5.254%. Over in the housing market, we actually saw some relief. The average 30-year fixed mortgage rate edged down 4 basis points to 6.77% for the week ending August 7th. This slight drop triggered a 3.6% jump in mortgage applications, showing that buyers are quick to respond to even minor dips in borrowing costs.
And what about oil? You mentioned prices are still high.
Yes, oil prices were relatively flat today, but remain high. Brent crude gained 7 cents to close at $88.98 per barrel, while West Texas Intermediate also added 7 cents to settle at $83.27. Geopolitical tensions are keeping a firm floor under energy prices. There were deadly attacks on cargo vessels in the Bab el-Mandeb Strait and the Gulf of Oman, which have severely dampened hopes of reopening the Strait of Hormuz.
Let's pivot to the stock market's darling, artificial intelligence. Tech seemed to carry the broader indices today. What drove that momentum?
It was all about earnings and guidance. CoreWeave and Supermicro Computer really reassured investors that the AI infrastructure build-out isn't slowing down. CoreWeave shares skyrocketed 19% after reporting that its second quarter adjusted operating margin hit 5%, beating expectations, and its revenue literally doubled compared to last year. Supermicro also jumped 19% on a very strong first quarter forecast. That sparked a broader AI rally. Dell Technologies advanced nearly 10%, Micron Technology rose almost 5%, and Cisco Systems gained close to 3%. We even saw the U.S.-listed shares of Dutch neocloud specialist Nebulous soar a massive 34%.
Incredible numbers for the tech sector. We're going to take a very brief break, but when we return, we'll look at how the global markets in Europe and Asia fared today, analyze the latest technical setups in Forex and precious metals, and highlight some of the day's biggest individual corporate movers. Stay with us. Welcome back to Market Brief After Hours. Let's shift our gaze across the Atlantic. European markets didn't seem to share Wall Street's optimism today. What happened there?
Europe was hit by a wave of profit-taking. The Pan-European Stoxx 600 index ended down 0.16%. Looking at individual countries, the UK's FTSE 100 fell 0.1%, France's CAC 40 dropped 0.46%, and Switzerland's SMI settled 0.86% lower. Germany's DAX fell 0.23% as investors digested final inflation data showing consumer prices accelerated to 2.8% year-over-year in July, up from 2.3% in June, driven largely by the end of government fuel tax subsidies.
And what about Southern Europe? Did we see a similar inflationary trend there?
It was a bit more mixed. In Italy, the annual inflation rate was revised up to 2.9% in July, slightly down from 3.0% in June. Temporary energy exports from the Middle East helped ease some of those price pressures. Meanwhile, Portugal saw its inflation ease to 3.0% in July from 3.2% in June, marking its lowest level in 4 months, with unprocessed food and energy prices both softening.
Moving over to the Asia-Pacific region, it sounds like we had a much more active and generally positive session there.
Absolutely. In China, the Shanghai Composite rose 0.32%, led by tech. However, Hong Kong's Hang Seng Index fell 0.83% due to fading hopes of a U.S.-Iran shipping deal. Japan's Nikkei average jumped 0.83%, with major banks like Mitsubishi UFJ and Sumitomo Mitsui both rising around 3% as a weaker yen fueled expectations for rate hikes from Bank of Japan. South Korea's KOSPI index was the star of the region, rallying a massive 3.68% to close at 6,579, driven by heavy bargain hunting in semiconductors. Samsung Electronics surged 6.7% and SK Hynix advanced 5.5%.
And how did things look down under in Australia and New Zealand?
Not quite as bright. Australia's S&P ASX 200 dropped 0.45%, dragged down by its major banks despite Commonwealth Bank reporting a record-high annual profit. New Zealand's S&P NZX 50 also fell 0.89%. Lastly, in India, headline inflation rose slightly to 4.45% in July, up from 4.38% in June, which was right in line with market expectations.
Let's dive into the foreign exchange market now. There's been some really interesting technical action across the major pairs. Where should we start?
The Euro-USD pair fell 0.19% to close at 1.1520. Technically, it faced rejection near its 100-day simple moving average, which sits at 1.1567, and ended the day near its lows. However, it remains above its 50-day moving average of 1.1466, but below the 200-day average of 1.1627. This suggests the pair is in a bit of a transitional phase. If it can hold above 1.1520, the short-term recovery remains intact, but a drop below that could trigger a deeper pullback.
And what about the British pound against the dollar?
The GBP-USD pair also saw its momentum pause, closing down 0.13% at 1.3490. Buying attempts were capped near the recent resistance level of 1.3546. Despite this minor pullback, the broader bias is still bullish. The pair is trading comfortably above its key moving averages. The 50-day is at 1.3369, the 100-day is at 1.3409, and the 200-day is right next to it at 1.3408. Holding above 1.3488 keeps the upward structure intact.
Let's look at the Aussie dollar against the New Zealand dollar, which had a stronger session.
Yes, the Aussie-New Zealand pair rose 0.43% to close at 1.2057, forming a very strong bullish candle. It's currently recovering from a steep decline we saw back in June. It is trading below its 50-day moving average of 1.2081 and 100-day average of 1.2108, but remains well above the 200-day average of 1.1881. If it can close above that 50-day average, we could see it push toward 1.2108.
And finally, the US dollar against the Japanese yen.
USD JPY edged up 0.16% to close at 159.51. It's trying to reclaim some lost ground after a sharp sell-off in late July. The pair found support near its rising 200-day moving average of 158.11, though it remains below its 50-day average of 161.13 and the 100-day average of 159.99. A close above 159.99 would really strengthen this recovery.
Turning to commodities, precious metals had a very dynamic day. Gold seems to be on a tear.
Gold was incredibly strong, surging 0.93% to close at $4,412. It decisively reclaimed its 100-day moving average at $4,393 and is well above its 50-day at $4,160. The next big technical target for gold is the descending 200-day moving average at $4,486. Silver also posted gains, closing up 0.99% at $65.30, but it showed a lot of volatility. It touched an intraday high of $66.79 before hitting some heavy selling pressure that left a long upper wick on the daily candle. It's trading above its 50-day moving average of $61.99, but still has work to do to clear its 100-day and 200-day averages.
To wrap things up, let's look at some individual stock stories that made waves today. There were some massive double-digit moves.
Absolutely. Wendy's was a standout, jumping 15% following reports that Nelson Peltz's Tryon Fund Management is preparing a bid to take the fast food chain private. Another massive winner was Quantinuum, which rallied over 28% after forecasting better than expected 2026 revenue between $28 million and $32 million.
What about on the downside? Who took a hit today?
Cerebras Systems raised its full-year guidance in its second earnings report since its May IPO, but the stock still tumbled about 15% in extended trading. AECOM also dropped 9% after reporting a 14% year-over-year decline in revenue to $3.59 billion, with its Americas net service revenue coming in well below forecasts. Finally, National Vision fell 11% after its full-year adjusted earnings guidance of 94 cents to $1.09 per share failed to impress Wall Street.
A highly volatile but ultimately productive day for global markets, with inflation showing signs of cooling and AI continuing to drive tech optimism. That's all the time we have for today's episode. If you find this useful, please follow Market Brief After Hours. Thank you for listening, and we'll see you next time.